Hello, it's Stephen Cooley, and welcome to the Stephen Cooley Real Estate Show. On today's show, we're going to talk about current topics. You know, I've been doing the show since 2001. I've been in real estate since 1989. Oftentimes, we answer questions that you guys send in to my email address, which is stephen@stephencooley.com, or one of my social medias, and all my screen names are my name, which is Stephen Cooley, and we answer those questions. The number one question going on right now, because it's spring, early summer 2022, is the interest rates and what's going on with the interest rates and how it will affect not only the demand for homes, but home prices. So I just want to hit that today since it's the number one question. I think it was every question asked other than one question was about what the interest rates were doing. So we're going to talk about that right now. The most interesting times in the past for me in real estate has been when the market is changing. By changing, I mean something that's going on in the market that is shifting it from a buyer's market to a seller's market, or a seller's market to a buyer's market. It makes the market really interesting, and that's when people really get in and buy homes and get really good deals on them, or sellers sell at a really high price and get a lot for their home. As we all know, we've been in a seller's market for the last 3 years, which just means that sellers were kind of in charge of the transaction, that they were getting top dollar, and buyers were having to pay top dollar to get the house. The reason that's not always a good thing is most of the time when we sell a home, we go and buy a home. So even though you get a lot for your house, then you got to go pay a lot for another home. Also, we all have friends who are buying and selling, and family members, and we want them to be able to get good pricing on homes too. So the seller's market shifting back to a neutral market or to a buyer's market is not always a bad thing. Real estate is similar to the stock market in the fact that people sell high and people buy low, and that's a good thing. And so it's the same thing going on in real estate. So with the increase in interest rates, it's going to cost buyers more per month to own the home that they want to buy. So how do we make lemonade out of those lemons and the fact that interest rates were 3% and they're close to 6% now? So let's hit the three things that really affect buyers when the interest rates are high. Number one, buyers qualify for less money that they can borrow, so they're going to buy less expensive homes. Some buyers now will not qualify for a loan, or they'll qualify for a loan that is such a low price point that there are no houses. And three, because more income will go to housing out of their budget, they'll have less money to spend on other things like car and travel. So now let's go back to making lemonade out of lemons. And let me tell you why this is still a fantastic time, maybe even a better time for buyers to buy now with higher interest rates than a year ago when the interest rates were lower. So I'm going to explain why it benefits buyers for increase in interest. Number one, and this is one of the biggest, most buyers had to fight to get their dream home over the last 3 years. Last year, most homes had 50 or more buyers interested in the home, and to win the home, the buyer had to sometimes go 10 to 100,000 more than the seller was asking to be the winner on the home, and they had to pay cash, which meant they had to go borrow the money or take the money out of other funds. And so now there'll be less buyers fighting over that home, and the buyer who wins can pay full price, but not over full price, and have a better chance of getting the home and not competing with so many other buyers. Number two, the second reason that interest rates are going up, it's not such a bad thing, is that now there's more than just one house available for buyers to see. Homes will sit on the market a little longer, and buyers last year would just see one home and have to fight to win it. But really, it's a better market when buyers, and if you are a buyer, can see 3 to 5 homes in the neighborhood or the subdivision, the school district, or the zip code that they want to live in. Number three, with the higher rate that you can get today, remember this: if the rates continue to climb, the rate you lock in today, even though it's higher than last year, will be a low rate if rates continue to go up. If rates go down, you can always refinance and get the new lower rate, but you've won the house. There's a quote that I love. It's not mine, but I read it online, and it says, marry the house, but date the rate. And what that means is lock in the home, and the rate you get today is just temporary. You can always change rates when rates go down. There's one thing we know for sure about real estate. Shelter, which is a home, will always be desirable. We as humans always seek shelter, and also owning a home is always a long-term, great investment and tax shelter. Listen, the 3 loans I've gotten on residential real estate in my career, one was 11%, one was 9%, and the last loan I got about 10 years ago was 7.5%. I still bought real estate. Also, when you sell high and when you turn around and buy high, you're moving that money you made into a new house. Also, when you sell low, you get to turn around and buy low. So you always benefit from a seller's market or a buyer's market. For all your real estate needs, the agents here at Stephen Cooley Real Estate are available to give you the latest real estate information that pertains to the home that you are selling or that you are buying. Listen, in a shifting market, homes shift differently based on zip code, school district, subdivision, neighborhood, and distance to work. So if you're buying or selling, you need an expert who knows what's going on. The agents here at Stephen Cooley Real Estate are those experts. So give us a call here at Stephen Cooley Real Estate at 704-499-9099 or visit us online at stephencooley.com.